Okay, welcome to part two. So this is how I personally sell put option contracts. And I'm going to use Apple as the example because that's what I do. I do it often and I like to do it. First rules to learn. I know my risk tolerance. I've been doing this for 12 years, but I haven't been selling options for that long. I've only been doing that for the last 4 or 5 years, but more so in the last 1 or 2 years because I've learned. I know how much I'm prepared to lose. I never hold naked options around earnings time. So be careful. On the fourth month of the year, April and July and October and February, every 4 months, we have earnings. Know your calendars. If it's April, don't sell naked puts. Know what day of the month a company is going to report earnings because you don't want to be naked. If I sell calls, I always own the underlying stock. I have learned the hard way to never sell a naked call without holding the stock. Can you do it? Sure. Do people do it? It's a way of shorting the stock. Lots of people do it. I don't. If I sell puts, I sell them at a price I would be comfortable owning the stock. That's very important. I think I'm going to get into that. If I sell puts, I'll sell them at a price I would be comfortable owning the stock. What does that mean? If I sell a $195 Apple weekly put for $2.30, that means that if Apple ends the week under that strike price, under $195, I'm happy being told I have to buy the stock. Somebody is going to stick 100 shares into my account, take out $19,500, but my net cost will be $193.60, of course, because I've collected $230 for the premium. I am happy with owning Apple at $193.60. If you can't say that to yourself, then don't sell puts. So let's jump in with a real example. And these are real trades. This is a real case study of how I sold Apple puts in 2019. Why did I do it? I felt at the time, my first trade was February the 7th actually, that Apple was range bound and there was no good news coming for Apple. They just actually said that they were going to have dismal or less than stellar first quarter earnings that they were going to report in April. And the market was sort of mixed and choppy. China trade tensions didn't help either, but it did reinforce my belief that Apple was going to be range bound, that this price wasn't going to move very much in one direction or the other. By very much, I mean 10%. I owned 1,400 shares of Apple at the time. I had lost significantly in 2018 when the price dropped from 220 to under 160. And I wanted to free up some cash to do other things, but I still wanted to have my hand in Apple. So I sold 1,100 shares in 2 different accounts and I kept 300 shares. And I did some other things with that cash. I sold 600 in my margin trading account and 500 in a retirement account. And there are different rules for selling options in both of those accounts. And I'll show you what I did and how I did it, how I was able to sell puts in a retirement account. In a margin trading account that's fully taxable, my broker gives me margin. So I can use all of my money and some of their money to trade with. I can trade options using their money for which I'll pay interest. And I can use the cash from the Apple sale for other things that I want to trade. I currently have 6 short 190 contracts, and Apple stock is trading as I speak, well, sort of as of this weekend when I prepared this, 190.06. That's $96,930 I would have invested in Apple if I owned those shares. But the margin required to trade that is only $24,532. So this is a statement, a shot of my account where I'm 6 puts 2 weeks out. I'll explain later why I'm 2 weeks out and not 1 week. Closed Friday at 190.06. The margin requirement at the right-hand side of the screen, I need to have $24,500 in my account to cover that option, or they're going to charge me interest for that. In a retirement account, you usually can't hold any naked options. TD Ameritrade allows me to sell puts as long as I have enough money in my account to cover the obligation. So I sold 500 calls. They let me sell 5 contracts for a strike price of 170, but my broker holds on to $85,000. So in this account, I can't make use of the cash. And when the stock rises to $190, if I still want to be short 5 puts, they are going to hold on to $96,930. So you need to have the cash to cover your obligation in a retirement account, but that's not true in a margin account. Here's the Apple weekly chart that I looked at when I was making my decision. This goes back to 2015, and you can see 2019 had this drop coming into the beginning of the year, and then at the beginning of the year we had this nice steady comeback into an area that I call a channel. So going back to September of 2017, 18 months ago, on a weekly basis, you can see many weeks where the price just bounced up and down between these two prices of roughly 160 and 180. So when we came back into that region in 2019, I had a feeling that it was going to move between 160 and 180. And it did for 1, 2, 3 weeks. Then the 4th week it shot out. But I was able to handle it all. In the week that I sold my stock and sold my puts, volume had turned negative and a doji candle had formed. A doji candle means that the trading price, the difference between the open and the close, is small and forms that cross with the crossbar in the middle. It's called a doji. It's indecision. Buyers didn't win, sellers didn't win. The price at the end of the day ended up in the middle, and the thinner that shoulder is, the better. But this is close enough to be called a doji. I sold 6 weekly 170 puts for the following week when the stock was trading at 169.49. I needed the stock to close over 170 7 days later to keep my profit. I've continued now to roll and trade around those puts, where right now the stock is trading at 190 and I'm holding 190 short puts that expire April the 16th. Over the next weeks from February the 8th, I would sell puts, collect premium, and roll the puts to other levels that I felt good with. The green lines show as time moved on, I changed my put position by moving from 170 puts to 172.50, to 175, to 177.50, to 182.50, to 187.50, to 192.50, and back and forth. I moved up and down over time, and I'm going to show you my account page. You can see in the first few weeks my theory of being price bound held true, and I was collecting some very nice profit. So I record all of my trades in Excel. I have a record of every trade going back to 2010. The first trade on February the 7th, you can see the date of the trade. Look at the first line. I made a trade on February the 7th, and I closed it February the 8th. 600 contracts. I collected $1. There was a big move in the stock the next day. The price went up tremendously. So I was able to buy back those short puts for 11 cents, and I pocketed $531. Then, that same Friday, I opened a trade with next week's February 15th expiration, and I collected $3.32, but you can see that the option price, the strike price, was $172.50. I'd be obliged to buy the stock at $172.50, but my net cost basis would be $172.50 less $2.38, or my net projected cost would be $170.12 if you're reading line 2. Pause the video and look at line 2 for a second. Look at the running column, the yellow column, shows the amount of premium that I've retained from selling and buying, rolling, over the period of 9 weeks. I've collected $9,476.40. But of course, the last one that I'm holding on to, which is the, sorry, it's not March 29th, 190, it's April 12th, 190 is my mistake there, is the equivalent, if I divide by 600 shares, the equivalent of $15.79 per share. So if I have to buy Apple stock at 190, I'll have collected $15.79 per share. So it's as if I bought the stock for $174.21. My books will show that I paid $190, but my books also show that I collected almost $9,500 in premium. So the bottom line, I've collected let's say $9,500, or the equivalent of $15.79 per share. My current contract is for $190. So my net cost basis would be $174.72. The only mistake on this page is that my current option is not March 29th, it's April the 12th. These are all the rolls that I made that are represented in the spreadsheet. I started with February 9th, 170. Then I went to February 15th, 172.50. Then I rolled to the following week at 172.50. Then I rolled to the following week at 172.50. Then I rolled to the following week at 175. I rolled another week to 175. I rolled to March 22nd, 177.50. Then something happened, and I went back. I rolled back a week. So it was during the week of March 15th. I made some profit on those March 22nd ones, and I went back and found that I could collect more premium with less risk on 182.50 puts for this week as opposed to the following week. And it played out nicely because I just rolled those March 22nd to 182.50. During the same week, I rolled to 187.50. I rolled to 192.50. And you can see that each time I did that, I was bringing in money. There are only 2 times, if you look at the Excel spreadsheet, there are only 2 times that I lost money. But I lost money against my total. I was simply rolling and increasing the amount of premium I was collecting and lowering my risk. Here's the account detail. I'm not going to go into the whole thing, but if you want to take a close look at it, there's no bullshit here. I started off by selling 600 shares at 172.34. That's what gave me my cash to invest in something else. And then that same day, I sold 6 February 8th for $1. You can see that on the next day, I rolled them for $3.21. That's what I showed you in the previous slide, which was buying them back for 11 cents and selling the next ones for $3.32. So the net credit to me was $3.21. Got a trade down here in blue, which was a trade that I placed in error. And then another trade down here that I blued out, which I bought 200 shares and then sold 200 shares because I just thought there was an opportunity to make money in Apple outside of the short puts. Where do I see it going now? I see resistance at this gap, which is also at the $200 barrier. So back to December of 2018, Apple suffered a gap where its price dropped from 202.61 to open or close that following day at 198.69. These gaps typically are resistance. This is a weekly chart, so the gap isn't measured accurately, but if this were a daily chart, the gap would be the close on Friday and then the open on Monday. You can see that the price back in end of February almost touched the top of that gap. If you look at a daily chart, you'll see that it did touch. And then it backed off. And I believe when the price goes back up again, it's going to have trouble getting through that gap. If it gets into the gap, $200 is a barrier where a lot of people put sell orders saying, once the stock hits 200, I want to get out. There'll be a lot of automatic orders being placed. It'll hit 200 and it will drop, I guarantee you, 110%. So what I haven't discussed, you obviously don't sell puts, then wait for expiration. You have to be active and you have to be watching those puts, not every minute, but several times a day. Knowing when to take profits by buying back your short puts and then opening new short positions, or simply rolling them up, which means buying them back for one price and selling them for a higher, or down, which means buying them back for one price and selling at a lower price, or rolling ahead, which is selling the following week for the same strike position, isn't discussed here. Experience will teach you to do these things. I'm not sure that there's a set of rules that are hard and fast that could tell you what to do. Last slide. How long will I continue to hold these short puts? As the price approaches 200, I see the unfilled gap, and I know there's a mental barrier. So I could be in this trade for many, many more weeks. 4 weeks, 6 weeks, maybe right up until Apple's next earning report in the third week of April. So that isn't many more weeks. That's actually only a couple of weeks. So I will be out of this trade before their earnings. Remember, I said I don't hold during earnings. So I will be out of this the week before Apple reports earnings. Market uncertainty and summer all make for choppy times ahead, which frankly is in the favor of anybody selling puts. So I hope this was helpful for you. Thank you very much. If you have any questions, just post them below.